Hi guys, welcome back to the big picture. So last episode, we debuted Greg from Amber Data, hi Greg, as our co-host and mentioned that we also had something else in store. Well, today we unveil that. So Marty, or at Thinking Vols on Twitter, as he is known, will also be joining us on a regular basis going forward. So super pumped to have him back on the channel. I think the episode we did with Marty was like one of the most viewed, the big pictures of all times. And, that's saying something. We have like 36 episodes of these things now. So super pumped to have him back more frequently and certainly timely given the spot and vol moves that we've had over the past week or so. So certainly a new sort of brand for the big picture going forward, and really excited to be doing it with both of these guys. So before we begin, smash that like, hit that subscribe button. We have a great episode for you today. Some of the best commentary you're going to be receiving in the crypto derivative market. And also one more shill. If you haven't subscribed yet to the Paradigm Edge Telegram channel, please do that as well. We will link that in the description below. We're approaching almost 1,500 followers on that now. Post twice a day what we're seeing in the crypto options market. So diving right in, Marty, welcome back, man. Super, super pumped to have you. And I know on our episode, I think it was about like a month and a half ago, you gave your background a little bit, but since you are now officially a co-host and going to be joining us quite regularly, if you can just give a 2-minute background of how you got into the crypto vol world, that would be awesome.
Sure, sounds good. My name is Marty, at Thinking Vols on Twitter. Previously had a hat business and 10,000 Twitter followers, but I think Mr. Musket shut me down. It was selling too much vol. They didn't like that. Right now we run a options fund, kind of unwinding that as this low volatility regime kind of just keeps persisting, and you never know when, the steamroller's coming. So we can get into that a little bit later. Before that, I think I have a non-traditional background. I was more of a spot buyer. My friends were using it to buy fun things online. And then I turned into a directional perps trader, and then learned about this options and volatility thing, and, totally got steamrolled, totally lost a bunch of money. And then I got an opportunity to work at a small fund and really learn how to trade and how to manage a whole portfolio, and then spun that off and opened up my own shop. And now we're here, I don't know, 2.5 years later. I don't know, time flies with COVID, could be 3 years.
Yeah. Oh, awesome. Well, it's definitely a mission of Paradigm to get you back to 10,000 followers. We're certainly going to be shilling you in the Edge chat and all over the place. And if you guys haven't seen yet, we got the remnants of the discontinued hat business here, and hopefully some more merch to come in the future.
So fun because you just gave it all away, right? It was more like a screw you, and we just gave it all away. Anything that was sold, we donated all the money and, took a total loss. It was more for like community, and everybody who got a hat loves it, and everybody who didn't get a hat is a pure hater.
I love it. Okay, awesome. So let's jump into this thing. I know, Greg, you prepared a good amount of slides. Obviously, a lot's happened over the past week. So you wanna share your screen and get into it?
Yeah, absolutely. You guys can see this okay?
Yeah.
So here's what I'm starting with. It's just the ETH Dvol Index, Deribit, call it ETH Fix, and then divided by the Bitcoin Dvol. And so what's really interesting is that, when we had this sell-off a couple weeks ago, or on the 17th, a couple weeks ago, we had a huge spike in ETH vol versus Bitcoin vol. So year to date, when we've had crypto rallies, they've been led by Bitcoin. And so the bullishness has created a higher volatility for Bitcoin versus ETH. And now when we have a sell-off, it's the opposite. Then we had the Grayscale news come out, which was pretty bullish. And then that relationship just went back down. ETH volatility went back down relative to Bitcoin. So what's interesting here, a couple things. Let's just go to the next slide here. So the reason why this is, and we noted this in our quarterly report that we released back in July, is that we can see the spot vol correlation in 2023 are divergent between Bitcoin and ETH. So Bitcoin's got positive spot vol. It's around 0, but it's slightly positive. And then ETH spot vol is around 0, but slightly negative. So that these relationships loosely hold true so far in 2023. Now, what's really interesting is because ETH vol has sort of had that spike on the sell-off, the wings got really expensive, and now sort of the belly has become relatively cheap. So if we look at the butterfly index, which is basically going to be the ETH Dvol Index divided by at the money 30, you can see that the wings are, relatively speaking, to the belly at this like extreme level. And if you look at your option ladder for the quarterly expiration in September, about 30 days out, you can see a lot of steepness in that skew relative to at the money vol. Let me just go real quick. This is the Dvol Index. It's around 36. And then if you look at that September contract, the at the money vol is 29, or call it 30. And so you can see that there's kind of this Nike swoosh. And so the cheap part of the curve is that September 29th expiration. And so it's, how do you unpack this? Are wings expensive or is the belly cheap? It's a two-factor component here. So which side leads? But that's just something really interesting that makes, going into the September quarterly expiration, 1x2 positions can be pretty interesting, where you buy the belly and sell 2 of the wings, or you could do flies. So those types of structures, if we're looking at this butterfly index, are at a really interesting level. And it's only true in ETH. We're not seeing that in Bitcoin. So that's kind of something that I wanted to point out that's lining up right now.
Yeah, what's super interesting there is I had a bet maybe since January or February with a CFA buddy of mine that if ETH gets into the 20 handles that I have to stop selling vol. And that was on like the 17th or something of August. And then we had the huge spike, I think literally the next day or, a couple days after. And now we're here back again, right? Everything, any sort of spike just gets hammered right back down. We've had every sort of news that you could possibly want. You have BlackRock, you had the XRP, you had recently the Grayscale and the SEC news, and any sort of short-term spike absolutely just gets crushed. It's interesting to note that price is up like 60% year to date, and people are getting super horny over like a 5% move. I remember like 10K Bitcoin candles. When can we get that back, Greg?
Right. Yeah, Marty, I'm curious how you think about that from like a portfolio manager seat, right? You have these spikes higher, right? And then it always kind of gets whacked back down, especially in vol. So like, do you use these sort of spikes, in the current regime to kind of initiate these sort of short vol positions? We've had this sort of stepwise price action. You have the spike and then immediately choppy price action where, spot does nothing. So seems like a great market for vol sellers.
Yeah, it's pretty interesting to see, right? If you just go look at like a price chart, we're at the same price we were in March, right? It's just been months of, a $5,000 range, let's call it. No major price spikes outside of that. From the year to date, we're up from, we're almost double, right? 16K, now sitting at 27K. As I mentioned earlier, we're currently unwinding any sort of short vol positions because at some point, maybe all of these ETFs get approved. Maybe there's a huge spike. Maybe we revert back to the mean. And currently, I'm just seeing that there's monies to be made outside of selling vol. I think we were the most public about it. We were, talking the most smack about it. And, before I get rolled over, I think it was time for me to exit. And I think the timing was pretty public and, on the old account was pretty public. And, before I get rolled over, it's time to exit out. In terms of managing a whole position, I think it's interesting I think we talked about it last time, was the largest ETH player trying to cover as fast as he can when the XRP news comes out. You saw this the other day when the Grayscale news came out. Like, everybody's just trying to cover everything as fast as possible, and they're willing to pay as much as they want so they don't lose as much money. It's still a very crowded trade. And one day Dvol is going to go back to this, I hope, right? 60 to 100. But as of right now, just down and to the right.
Right. Yeah, and kind of just to expand on that for the viewers, so that this overwriter on the grayscale news that we've spoke about was quite active in the September 1900s. The SEP 1900s, I think, is the biggest position that he has on. There's about 90,000 contracts of open interest in this thing. And on the grayscale move, he pretty quickly covered 25,000 of these things in two separate clips. And lo and behold, right when these started getting covered, you see Ethereum upside prints in SEP in 2000 going up, right? Could that be, the market maker who's putting it up? Or could this be, kind of just more of the same, where like you see this like crazy tendency in our market where people just continuously pay the highs in spot and vol, especially in 2023. And, I was thinking about why this happens, over this past week. And, I think I might potentially have an answer. And look, there's a massive human element to trading, as all you guys know. And, I think a lot of it just comes down to investor psychology and this sense of career risk as we're in crypto winter. The reality is the largest players in Bitcoin options are institutions who, to put it bluntly, kind of have this mandate where, hey, if Bitcoin teleports to 40,000, we better make a lot of money or you're fired. Like, to put it bluntly, that's kind of what is happening with the large, bigger directional institutions. So what happens is you just have this massive sort of FOMO, fear of missing out in this market from these players. So like what happened on the grayscale news is we start to get this rally. People come in to buy the upside. And then on the large moves, there's only so much liquidity to get your size off. I mean, the balance sheets of market makers are quite small. It's not like you have JP Morgan putting up your trade that has this mammoth balance sheet and has all this capital so you can get all your full size, right? So you see a large print go up, and then you kind of get this sense of like, oh shit, like people, are actually paying up for this thing. I got to get mine in too, because who knows if this is the actual time that we do go to 35K, that we do go to 40K. And kind of, to your point, like, I mean, Greg, you've always said this is like a big market for vol sellers, right? This is potentially something that vol sellers can take advantage of, right? Because when you do get those rallies, you get people paying up to it. And if you can kind of provide that liquidity into the buying, good time to put on positions, potentially.
Yeah, I think that's a really interesting thesis. I like that. And I think one of the interesting dynamics that we're seeing right now in the vol space, so like right now, just kind of deconstructing this Nike swoosh again, like we have crypto specific news that's a catalyst for the upside. Whereas so far, the big downside moves that we've seen year to date, like the SVB, which was initially just kind of a macro reaction on risk assets, brought down Bitcoin, brought down crypto, and the ball spiked on the macro news to the downside. And then it kind of became crypto specific. Bitcoin's a good alternative. Bitcoin spiked on sort of the industry specific news to the upside. So it's like downside is potentially macro and an upside is crypto specific. Now, obviously, regulation is a counterexample to the downside, but that impact seems to be fading a little bit. And so what I think is really interesting is if we're going to look at downside risk from the macro side, looking at sort of traditional asset class vol is, to me, a good place to look. Like we see VIX basically headed back down to year-to-date lows. This is really kind of post-COVID pandemic lows. VVIX, which is the VIX of VIX options, is headed right back down to lows. And then gold vol is like one of the cheapest vols in a long time. If you go back all the way to 2008, there's a period there that gold vol is around 10, but gold vol is pretty cheap too. And if Bitcoin is digital gold, I don't know. There's an argument. I haven't studied this relationship very closely, so I'm not totally bought into it, but theoretically I could see an argument that gold vol and Bitcoin vol might be somewhat related when the world is going crazy. Think Ukraine war, Russia being kicked out of SWIFT, things like that. that was a gold spike, that was a Bitcoin spike. Theoretically, those vols could be correlated. And so if I look at the macro landscape and vol is going down, that's something pretty interesting if the downside dynamics of crypto are led by the macro.
Do you just think that like people aren't pricing it incorrectly, or people aren't pricing it in correctly, not incorrectly, or is it just like that the market is that dead, right? I mean, stocks are just keep climbing up. Crypto was the first one to move, right? Crypto is the last free market, so we're like the first to move up or down. We did numbers way before stocks did numbers. Now stocks are catching up and crypto's, doing nothing. Do you think that people just aren't pricing in these vols at all? The market's that dead. People are chilling in the Hamptons. They're not at the office. What's going on here, Greg?
Yeah, I think risk assets and crypto included. Well, two things. I think there's a structural downward supply of vol, meaning like a structural downward trend in implied vol from an increasing supply of players in the space. I think that's going to be the trend going forward for a long time. When we look back to, say, 2019 to 2020, 2021, like as Joe pointed out earlier, market makers only have so much potential for inventory, and you would see like huge premiums in implied vol versus realized vol. I think that trend is going to get squished over time. So I think that's almost a given as we grow the space. But as far as like right now, to me, this is cyclical. We have kind of a dead zone while we wait for ETF approval, while we figure out the regulatory landscape. This is in the crypto specific mode. And then in the macro mode, we have a Fed that's really data dependent, wait and see. So we're just kind of waiting for more numbers to come out. They're sort of telegraphing what they're going to do, whether they're just going to hold rates as is longer, or maybe put in another hike if data still comes out strong. So I think like it's just a wait and see mode, both in the crypto sector and then in the macro sector as well. That's kind of how I'm viewing the current vol landscape.
Yeah, just when I'm looking out, right? If we're looking at catalysts, we've had every catalyst we possibly could have. I don't see a spot ETF getting pushed through, and I don't see the SEC's hand getting pushed until that there's full clear-cut regulations and tax guidance on crypto in the United States. You have other players that are picking up these volumes. You have Brazil, you have UK, you have, a handful of others that are coming out with clear-cut regulations and tax guidance, and the US just seems that it's going to miss out on this sort of innovation. But I don't think you're going to see a spot, even after this grayscale news, they can refile, and then the SEC can just push it back or postpone or deny it based on something else, right? It doesn't have to be this same reason, but they can come with a new reason.
They can, but if they do, I mean, it would be new reasons that they didn't bring up previously, right? We obviously know, the market manipulation argument that they have, but like, I don't know. Is this the sort of sword that they want to die on? Like, oh, okay, this reason was not legitimate according to the judge. Let me just pull out of my ass another reason. Like, yes, it's possible.
Why not?
Like,
why not?
It undermines it. Like, for the future of the SEC, it would massively undermine the credibility. And look, I mean, you could be right. Maybe they don't give a shit. But, at this point, like, I just find it hard to believe that this thing isn't going to go through next year.
Yeah, I think Greg brought it up in our first pod in January. He was like, what do you think about the grayscale trade, the GBTC trade? And I want to say my answer was, I don't touch anything Barry does with a 6-foot pole because he always wins, right? So at some point, it's going to get approved, but I'm just not sure when, and I'm not sure I even want to play in that sandbox or play the discount NAV game. More power to anybody who wants to, but not for me.
I actually think
it's interesting. I'm just looking at my screen right now at the skew pricing, right? And I look at the longer dated skews, like June 24. That's trading 6 falls. Maybe this is, all the institutions that I've been speaking to have this sort of view that this is sort of coming at, in Q1 next year at latest, kind of right after the halving. And yeah, I think it's interesting to see, the pricing in those long dated options, albeit there's not a lot of liquidity out there, but I think there's something to be said where, that upside is just trading so jacked compared to the puts, especially when you look compared to the belly of the curve where it's, 1 vols to 2 vols.
Yeah. So you're basically saying like people are playing those longer dated options thinking we'll get an ETF approval and those things will, essentially pay off. So they're willing to pay a couple balls over. Yeah.
The biggest open interest position, and look, and it's not to say like, one or two institutions believe it's going to happen, but like one of the biggest open interest positions out there is like the December and March 40,000 calls. Mm-hmm. Kind of sort of playing for this continuation of this bull run, but we'll see. Look, I'm not a legal expert. It's tough to really determine. But like one thing I'm curious to ask for you guys. Marty, on our call, our podcast a couple months ago, we talked about like optionality in crypto equities versus just trading the crypto options. And if this crypto ETF, spot ETF, does get approved, right? Like, what does this really do for like the future of Deribit and CME options? Like anecdotally, I was out with a guy last week who was, quite active, on the CME as a market maker. And I asked him this question. I'm like, look, like once you have this ETF that provides this familiar structure, right? You don't need new relationships with brokers and custodians. They're already in place. And this ETF structure is something that compliance departments like understand and are comfortable with. So like, if I want to get access to this space in options, if I'm an institution that, doesn't have a lot of crypto on my balance sheet, I'm just going to go and trade the options on the ETF that are going to be listed 3 weeks after the thing launches. It's going to get interest. Look at the BitO volumes yesterday or 2 days ago. Yeah. 800 million. It was like the second biggest day ever. As soon as this thing gets listed, there's going to be interest. We can argue when it's going to happen, but there's a part of me that thinks that all these institutions are just going to trade, options on this thing.
I think that you're fair to say that, right?
Yeah.
Yeah, no, right. And you have to do KYC and compliance to Deribit, and it's coin margined. These people have to return cash to investors every quarter, right? They can't, I guess they could hedge it out, but it's going to be very interesting. There's going to be interest. It's going to pick up, but is it just going to be the U.S. playing in their own sandbox? Is it just going to be BlackRock, JPM, all these guys? Or are we going to be left on the sideline as crypto natives and playing in our own sandbox? I think there's going to be 2 different sandboxes of institutional players and then kind of pro tail and retail still sticking to Deribit, on-chain, all of this stuff. JPM doesn't want to, play on Arbitrum or on Optimism, right? It's just too many risks. They don't know how to do it. It's going to take too long to get that through compliance, and it's way easier just to go trade whatever BitO or whatever they're going to call it, the new spot ETF options.
Yeah, I totally agree with you. Like at the end of the day, we're going to have this sort of like bifurcated sort of crypto derivatives ecosystem where like I think all the institutions are are just going to trade it through the ETF. And I'm curious what happens with like the CME as well, right? Like I'm curious how the CME is thinking about this, right? Because like what they're trying to do is like, at least as they're building like the CME options, is target those institutions and get them to trade on them, right? Well, a lot of the institutions that I speak to don't really want to allocate to the CME because, while yes, you have this higher degree of trust and, you don't have to really worry about counterparty risk. Like the margining doesn't really make it conducive to move your strategy over there. Like to be blunt, that's what these institutions are saying. So like, what is the CME going to do about it when, this spot ETF eventually does get approved, and then all the institutions just put their money and trade the ETF, So Yeah, just interesting.
Yeah, it's going to be interesting. Yeah, two different sandboxes, I think, right? And yeah, I just want to go back to what you're showing on the screen. This flows. People are overpaying just a couple vols, but I was looking at dated futures. Like you can get, I don't know, yesterday or 2 days ago, you could have got June dated futures for like 2% over spot. You're like, why wouldn't you just do this? Why are people leveraging perps? Why are people paying funding? Why are, like, take a little step back and look at what's presented in front of you. Either it's completely mispriced and you're going to cash if it's on options or dated futures without paying a funding, or you're totally wrong, right? It's either like all in one day at a time, or it gets passed through, or it doesn't. And I'm kind of in the band camp of in the middle. I don't see the SEC getting their hand forced because it will look so bad. I would hope that there's some clear-cut regulation on crypto and tax before a spot ETF is approved, or else we're just back at square one in the regulatory nonsense, like just regurgitating the same stuff over and over again.
Right. And I think, I mean, you just look at the spot action, right? Like after the immediate, sort of knee-jerk action higher, I think people came to their senses and were like, oh, this doesn't actually mean that the ETF is approved. Because Marty, exactly what you're saying, right? They can certainly just file again and the SEC pulls another stupid reason out of their hat not to put this, right? And until we sort of have that clarity, right? I think especially, I mean, maybe things pick up in Q4 as people, come back from the beach and whatever and summer ends. But like, we kind of just have this apathetic market until we get to that.
Yeah, it's a wait and see market. I definitely think though, I'm kind of very pro the spot ETF. I think the spot ETF having listed option markets is the biggest holdback around crypto options, open interest growth and volume growth. Yes, Deribit would probably lose market share, or definitely would lose market share, but they would gain. They would have a slice of a bigger pie. And the way that, from my conversations with them, it's not something that they hope doesn't happen. It's something that they hope does happen because they want the space to grow. DeFi options will always be its own sandbox, but crypto spot ETF options, to me, that's retail and institutional. It's also global. Like the whole reason like the US dollar reserve system works so well is because like anyone from anywhere can participate in our financial markets, and they do. And so if we have the biggest options market in the world, and so if we have a spot ETF here, like this is where everyone will play, and this will become the source of truth. And not only will it become the source of truth, and CeFi cross flows will occur, Deribit versus whatever the spot ETF is, then DeFi will be able to reference sort of the new source of truth. And that's really how I see. That's the only path that I see to 10x options, open interest, and volumes. And theoretically, we should be 10x if we compare the market cap of Bitcoin to the open interest of options, and do that similar analysis for traditional assets.
I mean, yeah, the space is just so tiny when you compare it to like commodities, equities, rates, right?
Yeah, we need that to happen.
I'm talking my own book. That's why I came to Paradigm. I saw these things.
Exactly. 100x growth. Yeah, for sure, right? And like, what's the most Paradigm's ever done in like a day at notional?
I think the most we've done across BTC and ETH in just Deribit options is probably like, well, I wasn't here in 2020 where the coin prices were higher, but I think we did 1.5 billion notional, or close to 2 billion notional. Was probably,
yeah, you should be looking at a 10x with all of this stuff if it's clear, right? You should be in the 10 to 20 billion notional on a peak day, maybe even higher. Go look at TradFi volumes, right? And then compare volumes.
I talked to my people back in traditional markets at JP Morgan, and they asked me like the same sort of question. They're like, bro, I just did an S&P trade that was 1.5 billion notional, like, literally today. Like in one clip, right? It's just
before I went to lunch.
Oh, yeah.
Yeah, and I think
exactly
retail, this is the avenue. Like U.S. retail always asks, like, how can I trade these products? It's like, sorry, you can't. This will be the avenue. And BITO is already like 20% of the open interest of Deribit. And BITO is like, it's an unclean product. It doesn't, there's carry into futures from which they roll. So there's a decay. It's kind of a harder product to trade and price. And that already has a good amount of open interest in the options.
Yeah, exactly. It kind of just shows people will reach to anything, even if I lose 10% on like the contango roll down, which is just crazy. So.
Or maybe they don't even know, right? Maybe the retail doesn't even know what they're trading. They don't understand futures, cash settled ETFs, and spot ETFs. They're just, slanging money around. They don't know what they're trading.
Yeah, that's fair. I guess it is really easy for us to say, where it's just like, oh, of course this thing is going to underperform. For the average layperson, I guess that makes sense. Okay, awesome. Looks like we're coming up on 31.
One last note.
Yeah, Greg, final thoughts. Give it.
Final thought. BITO, back to that net asset value discount in Grayscale GBTC. That's an interesting convergence trade to bet on a spot ETF being approved. You buy the Grayscale ETF, which is trading at a discount. You sell BITO against it. So now you have a no net cash position. BITO, the CME futures trade at a premium to the index. So BITO has a roll down decay grind. You hope that you get the spot ETF approval. So the net asset value discount closes on Grayscale. And so you converge both sides of that trade. BITO is overpriced, not overpriced, but it decays. Grayscale's at a discount. And then you can bet on conversion. That's a clean way to bet on spot ETF.